Hello, everyone. We've got a lot to discuss today. That big bad trade war with China, it's got investors' brains in a blender. Binance revealed that they are helping many other countries establish their own strategic Bitcoin reserve, and Perplexity recommends the top 3 stocks to buy right now. We're live today from the desk of Anthony Pompliano. All right, folks, we got ourselves a trade war on our hands. The United States and China were locking horns, and we're going to see who's going to end up coming out on top. Now, here's the thing. When the United States decided to go ahead and implement all these tariffs, we decided not only to put tariffs on the entire world, but we've really ratcheted it up with China. And we can already see the impact of this. If you take a look at US imports and exports or China's imports and exports, everything is down 30 to 60%. Now, what that means is that global trade is quickly slowing because everyone is trying to figure out how is the uncertainty going to get solved, what are future global trade routes going to look like, and who's going to have to pay tariffs and who's not. Now, of course, back here in the United States, everyone is yelling and screaming, saying that tariffs are inflationary. If you increase the tariff, then all of a sudden the domestic manufacturer or the domestic distributor is going to increase the price of a good. First of all, that's not true. But second of all, you can't have inflation if you have global trade slowing down. Remember back in 2020 when the velocity of money in the economy went to near zero because everyone was locked in their homes? What did you have? You very quickly had a liquidity crisis in financial markets and you saw inflation start to crater. But then we printed tons of money and inflation ripped all the way up to over 9% in the coming years. The same thing is happening right now. You can't have high inflation if all of a sudden the velocity of money and trade is slowing down. So it's another reason why tariffs are actually deflationary. They're not inflationary. You can see this in things like the oil price. It has been cratering for a couple of weeks now. And so ultimately, this brings the question back to the Federal Reserve. The Fed has had their interest rates at a higher rate than maybe they did back in 2020 and 2021 because we were at zero then. So what exactly is the Fed going to do here? I've been saying for weeks that we need to cut interest rates. If we look at something like Truflation, the real-time inflation metric, you can see that inflation measurement from Truflation is at 1.3%. The government metric is still at 2.4%, but the government metric is lagging and inaccurate. Truflation is real-time alternative metric that I think is much more accurate. And so if you look at the Fed, you have to ask yourselves, are they going to cut interest rates or not? This morning, we saw President Trump. He's going ham on Jerome Powell. He's yelling and screaming at him over social media saying, cut interest rates, and I can't wait for you to be terminated. Now, of course, anytime you get all these bigwigs going back and forth, you got to ask yourself, take away all the emotion, take away all the politics. What are they likely to do? And whenever you have global trade cratering like this, and you have inflation that's down at 1.3%, the Fed's got to cut. They may not want to cut. They may not want to give this victory on the political side, but they're going to have to cut interest rates. And so my expectation is in the next 2 Fed meetings, we're going to get at least one cut. I don't know if it'll be the first one or the second one, but I think that they're going to have to cut. And so naturally, if you have inflation cratering, if you have global trade slowing, and then you get an interest rate cut, guess what happens? Cheap capital starts to come back to the market, and then that should lead to a bounce in not only investment assets, but also you're going to see people taking mortgages. You're going to see businesses available to get cheaper capital as well. And so, yes, as soon as you put the tariffs on, all of a sudden everyone's yelling and screaming. They're all fearful. Again, those investors' brains are in a blender. But calm down. Take a deep breath. It's going to be okay. An interest rate cut is coming. We're going to get cheaper capital into the market. We're going to get a tax cut hopefully later this year, and you're going to start to see more and more deregulation. As you get the deregulation, the tax cut, and the interest rate cut, those are going to be balancing components to the tariffs. Now, of course, it's a complex machine, and so can you get out of balance? Absolutely. But the hope here is that we can actually find some even ground, and we can use things to balance out the revenue generation and the reshoring from the tariffs, and do that with tax cuts, deregulation, and an interest rate cut. So let's see what happens, but I think that we're going to be okay, but it's important to keep paying attention, and global trade is definitely slowing in the short term. The Financial Times reported this morning that Binance, the world's largest crypto exchange, they're advising numerous countries and sovereign wealth funds on crypto policy, but also they're helping these countries establish strategic Bitcoin reserves. Now, it makes sense. Countries want to make sure that industry players are helping them be informed on all different types of policies. But this happens in every other industry as well. So the part of today's article that caught my attention, though, is that so many nation states, they're considering a strategic Bitcoin reserve. This is the game theory that Bitcoiners have been talking about for decades. Once one large nation starts to acquire Bitcoin, all countries are now incentivized to compete to acquire as much Bitcoin as they possibly can. Take a look at this graphic. It perfectly explains the dilemma that countries now face. A strategic Bitcoin reserve, it was a cute idea when El Salvador or Bhutan were doing it. These countries could be easily ignored by the mainstream media and also by larger countries. I wouldn't be so fast to discount them. But it is not possible to ignore the United States of America. It's the greatest economy ever constructed in human history. We're the kings of the world when it comes to capitalism. If America says Bitcoin is strategically important, every other country is going to get in line and they're going to start seeing the asset that way as well. And it sounds like the Financial Times, they're confirming this. They're reporting that the theory is now being supported by action all across the globe. So this week, we also saw another interesting development. Came out of Panama City. The mayor, he was there posting on Twitter at me. He said that Panama City Council, they just voted in favor of becoming the first public institution in the government to accept payments in crypto. Citizens are going to be able to pay taxes, fees, tickets, and permits all in crypto, Bitcoin, Ethereum, USDC, USDT, etc. Now it's noteworthy because we're watching countries embrace Bitcoin and crypto in a different way. Some are buying and holding. Some are allowing crypto payments. Some are mining, and others are probably doing things they haven't even revealed yet. While it may be tempting for Bitcoiners to go ahead and yell, "I told you so," I think it's much more important that we collectively keep our foot on the gas. There's way more educating that needs to be done, and there is more progress that needs to be made. Stay focused on the inputs to the process, and the price of Bitcoin, that'll take care of itself. I asked Perplexity, my favorite AI search engine, to go to work for me this morning. My question to it was, what are the 3 stocks that you think are most attractive to buy right now? Now, I gave the model very simple criteria. I want you to optimize for companies that can be resilient in any market condition, but I also want them to have significant future upside. Perplexity's first recommendation was Alphabet, aka Google. It supposedly stands out because the company has a dominant position in digital advertising, cloud computing, and artificial intelligence. It also has a strong balance sheet and consistent cash flow. I like those ideas. Alphabet, according to Perplexity, trades at a reasonable valuation. The forward PE is 18 to 20, and it's considered undervalued by plenty of analysts. Those analysts think it's undervalued because it has diverse revenue streams and the leadership position it holds in AI and cloud. Now, Alphabet's resilience in market downturns, that comes from the core business. That core business includes search, YouTube, and cloud, which is essential digital infrastructure. And the company's upside, that's going to come from continued growth in AI, cloud, autonomous driving, health tech, and various other new ventures. Now, the second one that was recommended by Perplexity was Johnson & Johnson. That's a healthcare giant. It's got AAA credit rating. It's got more than a century of uninterrupted dividends. It's got a diversified portfolio spanning pharmaceuticals, medical devices, and consumer health products. Its products are in constant demand, regardless of economic cycles. And for that resilience factor, healthcare, it's a classic defensive sector. J&J's broad product base and conservative financial management make it one of the most recession-proof stocks available, according to Perplexity. And then obviously everyone wants to know, what's the upside? Ongoing innovation in pharmaceuticals and medical technology, plus global demographic trends, provide steady growth opportunities. And so that brings us to the third stock recommended by Perplexity, Digital Realty Trust. It reportedly stands out because the company is a global leader in data centers and co-location services. They own infrastructure critical to cloud computing and the digital economy. As businesses and consumers generate more data, demand for secure, reliable data storage obviously is going to continue to rise. Now, this business is resilient because unlike traditional real estate, DLR's business is tied to digital infrastructure, which makes it less sensitive to economic cycles and more aligned with that long-term tech trend. And so the upside is going to come from ongoing shifts to cloud computing, artificial intelligence, and data-driven applications. And that positions DLR for robust long-term growth. So there you have it. Those are the top 3 stocks to buy right now, according to Perplexity. Maybe the model's going to be right. Maybe it won't be. Maybe you're smarter than the model. I don't know. But let me know what you think. You think that these 3 stocks are actually going to outperform? That's it for today's show. Hope you guys are enjoying it. I'm having a blast doing this every single day, and I'll see you guys live tomorrow from the desk of Anthony Pompliano.